Good morning. It's Monday, the 27th of January, and this is Govindraj Ethiraj, headquartered and broadcasting and streaming, as always, from Mumbai, India's financial capital. Our top stories and themes for the day. Foreign institutional investors have sold close to $8 billion now in the month of January. JP Morgan warns of a sudden stop of foreign portfolio investment to emerging markets on account of better alternatives. India keeps options on crude oil open after sanctions on Russia, as there are many choices, says oil minister. And the Trump Tariff Tracker, another step back on China. And as India's middle class have a voice when it comes to taxes.
This is the Core Report with Govindraj Ethiraj.
Stock prices in India fell on Friday, losing for the third straight week as slowing corporate earnings and a weak rupee continue to put pressure. Like many other days, once again, the indices swung wildly on Friday. Global markets were looking stronger, though, because President Donald Trump took another step back on tariffs on China, and more on that in our Trump Tariff Tracker soon. There seems to be general consensus now that the third quarter is not going to spring any miracles or surprises. That's October to December 24, at least from a stock market's point of view. More specifically, the energy index was down 4.1%, brought down by high-weightage Reliance Industries and weaker earnings from oil marketing companies as well, according to Reuters, while the IT index rose 3.6% to become the top sectoral gainer thanks to strong earnings and a general optimism that the increased artificial intelligence spending in the United States will lead to more business here. On Friday, the 30 stock Sensex was down 329 points, finally to close at 76,190. The NSE Nifty 50 was down 113 points to close at 23,092. The broader market was under greater pressure. The Nifty Small Cap Index was lower by 2.35% and the Nifty Mid Cap was down about 1.5%. Foreign portfolio investors are continuing to sell aggressively, now inching towards $8 billion of net sales in the month of January. The larger concern is the attractiveness of the home market. With higher bond yields, funds will stay back in the United States and not travel to emerging markets. Now, this has, of course, happened before, but things are somewhat trickily poised right now. Emerging markets could be seeing a dreaded sudden stop of capital flow as President Donald Trump's America First policies pump up the U.S. economy and suck money away from poorer countries. Investment bank JP Morgan warned on Thursday in a report quoted by Reuters. Analysts fear sudden stops in capital flows because they starve economies of the money or funds they need to grow or even just keep going. JP Morgan's in-house indications show that there were $19 billion worth of net capital outflows from developing economies, not including China, in the last quarter, with another $10 billion expected to flee in the first quarter, which is the calendar year. With this in mind, this is not a situation where specific emerging market countries are under pressure and are facing balance of payments or currency pressures like was the case in 1998 to 2002, 2013 or 2015, according to JP Morgan. Nor was it a case, it said, of weaker US economy driving a risk-off worldwide sell-off. Rather, it is one of a strong US economy and policy risks pulling flows out of emerging markets, according to those JP Morgan analysts. How this situation plays out from here will depend, obviously, on what Trump does and whether key US data on jobs, inflation and retail sales proves strong enough to affect the Fed's interest rate moves, JP Morgan said, adding that even if a sudden stop does take hold in emerging markets, most economies should be able to absorb that shock. But those most at risk were Romania, Malaysia, South Africa, and Hungary. Gold prices inch up. With all this uncertainty, not surprisingly, gold prices are continuing to climb over 1% on Friday now, once again in kissing distance of its all-time high hit in October, thanks to a weakening dollar, in turn driven by President Trump's push for lower interest rates. This is the fourth week gold prices have risen now. Spot gold was up slightly to about $2,772 per ounce over the weekend and has risen just under 3% this week and is now about $17 away from the record high that it hit on October 31st of $2,790 per ounce, according to Reuters. Analysts said that Trump is at risk of elevating prices and the gold market perceives perhaps a higher inflation and perhaps a central bank that's more accommodative. Of course, in this general environment of uncertainty, Trump-induced or otherwise, gold is a strong hedge, low interest rates obviously helping. At the World Economic Forum on Thursday, Trump called for an immediate reduction in interest rates and the dollar hit an over 1 month low, making bullion less expensive for foreign buyers. Traders expect the Federal Reserve to leave rates unchanged at next week's meeting. Silver, meanwhile, was up slightly again at about $30.67 an ounce. ICICI posts good results. India's second largest private lender by assets reported higher quarterly profit on Saturday thanks to strong loan growth and net interest income, though its lending margins were down. The bank's standalone net profit was up around 15% to a record 11,790 crores in the October to December. That's the third quarter, above the average analyst forecast of 11,494 crore rupees, according to data compiled by LSEG via Reuters. ICICI Bank's total loans rose about 14% from the same period last year, while deposits grew about 14% too. Net interest income, the difference between interest earned on loans and paid on deposits, increased by 9% to about 20,000 crore rupees. Now, while loan growth has been strong, banks in general have to work harder to raise low-cost retail deposits to meet that demand. So ICICI Bank's net interest margin, which is an important gauge of profitability, fell to about 4.2% from 4.4% last year and 4.27% in the previous quarter. Other Indian banks, including Kotak Mahindra and HDFC Bank, have all raised provisions in the third financial quarter due to stress in unsecured agriculture and microfinance loans, according to Reuters. Clarity on Russian oil. Oil prices settled higher on Friday but were down for the week after rising for 4 straight weeks. President Trump's plans to boost domestic production while demanding that the Organization of Petroleum Exporting Countries move to lower prices has been seen as good for crude oil prices, but not much has actually happened. Possibly because the market, believes in the market to see how demand-supply forces actually shape out, including how all of this will lead to promised new supply. Brent crude futures were up about 21 cents to about $78.50 a barrel, so it's under $79 a barrel. Brent has lost close to 3% last week. Meanwhile, Trump asked the OPEC, which includes Saudi Arabia, to cut oil prices to hurt oil-rich Russia's finances and help bring an end to the war in Ukraine. One way to stop it quickly is for OPEC to stop making so much money and drop the price of oil. The war will stop right away, he said in North Carolina when he had visited to view storm damage over the weekend. OPEC's founding members, by the way, include the Islamic Republic of Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela, and it later expanded to include countries like Qatar, Libya, the United Arab Emirates, Nigeria, Angola, and Congo. Meanwhile, the United States also clarified to India that tankers loaded with Russian oil have to discharge by February 27th under the latest sanctions targeting Moscow's oil revenue, Reuters quoted India's oil secretary saying. The US had earlier imposed sudden and sweeping sanctions targeting Russian producers and tankers, and thus disrupting supply from Russia, which is also the world's second largest producer. The secretary said the deadline for completing financial transactions was now March 12th. India had become the top buyer of Russian seaborne oil sold at a discount after many Western countries imposed sanctions following Russia's invasion of Ukraine. The oil secretary said India would continue to buy Russian oil if it was priced below the $60 a barrel cap set by Western nations and was sold without the involvement of sanctioned Russian entities and ships. Oil Minister Hardeep Singh Puri said Russian oil now accounts for about a third of Indian oil imports. He also said there was no shortage of oil in the market as countries like Guyana, Brazil, Canada, and Suriname were increasing output despite cutbacks by some major producers. He said that if Russian oil was available at good discounts, we will buy. If it is available elsewhere, we will buy from them, largely reiterating a strategy that India has followed in the last few years. This segment was supported by the India Energy Week 2025, scheduled from February 11th to 14th in New Delhi, and you can register for the same using the link in the show notes. And here's the latest in our Trump Tariff Tracker. It's an about turn, or U-turn again. President Donald Trump has now said he'd prefer not to have to impose tariffs on China, even as he continues to threaten sweeping action. We have one very big power over China, and that's tariffs, and they don't want them. President Trump told Fox News in an interview that aired Thursday in the US, and he also said, I'd rather not have to use it, but it's a tremendous power over China. He had threatened on his second day in office to put 10% tariffs on China as soon as February 1st for allowing fentanyl to pour into America. Bloomberg reports that markets have now taken this as a positive sign that Trump has stopped short of imposing tariffs on China in his first days in office, and his recent threats were softer than those issued last year. On the campaign trail, he had floated additional tariffs on China around the 60% mark, which economists had said could decimate US trade with a Chinese economy so heavily reliant on exports. So Chinese stocks and the currency rose on Friday. Meanwhile, this is not tariffs, but a U-turn nevertheless for now. President Trump said on Saturday he may consider rejoining the World Health Organization just days after ordering a US exit from the Global Health Agency over what he described as a mishandling of the COVID-19 pandemic and other international health crises. Reuters quoted him saying at a rally in Las Vegas that maybe he would consider doing it again. I don't know. Maybe we would. They would have to clean it up. They, meaning the WHO, he said. The middle class bill. India's middle class is hurting from rising inflation and rising prices, with taxes contributing to a good part of it on both sides. Taxes are reducing consumption power, and first on income tax because of high income taxes or relatively high, and second, obviously, on goods and services, the taxes that we pay, the GST that we pay on everything we buy or we consume. The expectation is obviously that there will be some SOPs in the upcoming Union Budget 2025 to be presented on February 1st. New Indian Express columnist Shankkar Aiyar points out that the persistent food price inflation, now at about 8% over a year, has shrunk the purchasing power of middle-class households. The slowdown, which he says was visible by mid-year and signaled by this column in October last year, has been validated by data. So the steep decline in second quarter real GDP growth to 5.4%, with echoes in the first advance estimates of GDP growth for the year at 6.4%, reflect a slide in consumption and in both public and private investment, according to him. On the other hand, state governments are spending over 4.7 lakh crore rupees on subsidies, including 2 lakh crore, that's 200,000 crore rupees just on cash transfers to women. So the expectation is simple. The tax-paying middle class believes it deserves a share of the taxes collected, or at least lower taxes. And what are the chances of that happening, of taxes coming down? All of that, of course, depends on where the middle class sits in the political calculus. So I reached out to Shankkar Aiyar and asked him what was the political calculus looking like going into the union budget this year.
There are two answers to this question. So essentially, the urban middle class or the middle class doesn't form a large enough constituency for political parties to get concerned about. Although theoretically over 150 or so seats are in urban India, but they are not consolidated. The second part is that the middle class is not organized. There is only rage, outrage, and everything. So for the government, all the anger of the middle class, the counter to that is, okay, where will you go? Who will you vote? And there is also Brigade of Faithful. So a large part of the middle class believes in Hindutva, and so they will continue voting with BJP. So it's not like BJP will be alienated in its vote bank or alienated from its vote bank. But after Lok Sabha 2024, and now that we are facing an interesting election in Delhi, there could be some sort of passing showers on the middle class in the budget. By that, I mean now that we have 3 slabs, we might have 4 slabs. So 10, 20, 30 might become 10, 20, 25, 30, or 10, 15, 20, 30. So let's get the math right. All said and done, if everything goes according to plan, if the economy grows by 6.5%, if the revenues grow as much as they grew this year, and if the economy sort of chugs along, then based on that mathematics, the government has roughly about 90,000 to 1 lakh crore to play around. Now, who is a more important constituency? Forget about growth and all that, okay? Is it the rural class, the bottom of the pyramid, the voting class, or is it the middle class? If they have money to spare, they would address the schemes to the voting class. I mean, there's an economic reason also. If the middle class says the inflation has hurt them, surely that problem visits the rural and poor people also and probably hurts them more. Same with unemployment. I mean, the magnitude is much more for them. So the government will have some schemes for them. What the middle class hopes for may not come through. I mean, there's a very interesting conversation I had with a youngster last week, a conference where he said, will there be a cut in income tax? And I said, what would satisfy you? He said 18%. I said, that's a very precise number. How did you arrive at that? So he said, they're charging me 18% GST on everything. I want an 18% rebate. which was all very logical and everything. I'm not sure the government is in a position to do that, not unless they let the fiscal deficit slide a bit or reduce the target instead of 4.5, they say, oh, we'll touch 4.7 or whatever the math. So, A, the government has a constraint of money. B, it has to choose between three outcomes. One, stimulate growth through infrastructure, construction projects and stuff. B, it pays or stimulates the rural economy through some schemes in the farmers and stuff. And C, okay, gives the middle class some kind of lollipop. So this is never going to be happy. I mean, whatever it comes, it will come between 30 and 50,000 per year. That would translate to not much money. So whatever the tax cut comes, it's not as if the middle class is going to run and buy the next house or the next car or anything. So the stimulation of consumption, I mean, there's plenty of literature on how tax cuts do not necessarily result in consumption, right from George Bush's tax cuts to Trump's tax cuts. There's a lot of literature there.
So that's the cuts part. Let's look at some of the more fundamental issues, which is obviously income, and there's also inflation. Not that the budget can come up with any magic recipe for this, but how are you seeing this?
There is paucity of data on this. But let's look at the white collar, middle class job landscape. So, over the last 2 years, how does this play out? Parents borrow about 20, 30 lakhs and send their children to either an engineering college or a management institute to get an MPA. But as we both know, placements in both these categories have been poor over the last 2 years. So there is a family which has educated somebody, and that person is waiting for a placement or a job or whatever. So the first 4-5 months, the family says, okay, we'll get it, we're getting there, we'll do something or the other. But at some point, the family is also servicing that education loan. So they start to cut down on other expenditure. So that's one play that is happening. The other play is the peer effect, I call it. So if somebody in the neighborhood has lost a job or somebody is not getting a job, all of that starts playing into your mind. So what's happening with the middle class households is urban wages have not risen. In fact, in some cases, they're in negative over the last 4 years. The second part is that the food price inflation has hit them hard, and that food price inflation has visited several of their cost factors like education costs, medical costs, transport costs. So these are the major expenses for the middle class. So middle class is squeezed. I mean, politically speaking, there are the rent reapers and the rent seekers. The top of the pyramid is the rent reapers, which is the rich and famous. And the bottom of the pyramid is the rent seekers because they are wooed by political parties with various schemes and stuff like that. Stuck in the middle is the middle class.
So if you were to now look at the blueprint, I mean, as things stand, of what the budget might hold, so you're saying that if there is anything, it'll be more indicative or perfunctory for the middle class. We will continue to see more giveaways for the more disadvantaged sections of society, like we've seen in the case of the freebies, as the numbers that I mentioned, which you had computed. And the well-to-do, I guess, will be left alone because they're already taxed at a level where it's tough to go beyond this.
Yeah. So one other factor that will play into this is that the government may not be able to grow its taxes the way it grew last year. Because of the stock market, the capital gains, the IPOs and stuff has got a lot of this personal income tax being higher than corporate tax, and some of that will start slowing down. And what do you reap out of capital gains if the market is going down? So that's one side of the story. To me, I think the best the middle class can hope for, and hope is like the clouds, some bring rain and the others just pass by. So the best the middle class can hope for is a little adjustment in some of the rates and some of the, it's like easing of the belt a notch here and there, and just hope that the budget brings in growth. Practically, this is what the government has been telling the middle class over the last 5-6 years, that we are giving you growth, we are giving you metros, we are giving you airports, we are giving you highways. So be happy. All those selfies that we see outside the Atal Setu and the Vande Bharat trains, and there's excitement about this Vande Bharat with sleepers and without sleepers. All of this is the political parties know that the middle class is happy with all of this. They're not too concerned. I mean, their calculus is that the larger vote bank is the poor and oppressed class, the bottom of the pyramid. So the politics is a playbook of C.K. Prahlad. What C.K. Prahlad said, there's gold at the bottom of the pyramid. Politicians have discovered the gold, so you have all the freebie schemes and everything, and everybody is sort of focused on that. And you look at the manifestos in the last three elections, Maharashtra elections, Jharkhand elections, Haryana elections, nobody gave a sort of tuppence for what the middle class was thinking. It's only now that this growth has slowed down and the rupee has slid and all those issues. So suddenly there is a feeling, okay, maybe these guys, this child is crying a lot, so let's sort of address this part. And the irony is that Arvind Kejriwal, who started as like the middle class anti-corruption messiah or whatever, and that story is gone elsewhere, he has presented this, and he is known to be voted in by the bottom of the pyramid of Delhi. So he has put out this middle class budget, and that has kind of shaken up the system a bit, and there is a lot of conversation about this. But the best case scenario for the middle class is probably a little few adjustments and grand stories about Viksit Bharat and probably hope for growth.
Shankkar, thank you so much for joining me.
Always a pleasure.
Another luxury project is sold out. And this is, of course, where middle-class India, or for that matter, all of India or rest of India, does not exist, and its problems are quite distant and hazy, to put it quite mildly. Real estate major DLF on Friday said it got record bookings in its $4 billion super luxury home project in Gurgaon near Delhi. It sold 173 units in its Dahlias for about $1.4 billion. That's over 10,000 crore rupees in over 9 weeks, it said in a statement. This was also the first time that sales value achieved in a single project has crossed that figure. That's about 10,000 crore rupees in 1 quarter, according to a Reuters report. So the builder is now selling 420 units priced at an average of about $8 million or more than 65 crore rupees per unit in its sprawling 17-acre project. In 2023, DLF sold a $1 billion, that's about 8,000 crore again, upmarket residential project in Gurgaon in 72 hours. Affluent Indians are buying up luxury items like never before. Luxury homes accounted for 26% of total residential sales, even as affordable home sales, like affordable cars for that matter, are continuing to fall. The luxury home sale level was more than 3 times that of 2020, according to Anurag Property Consultants. Analysts think that this trend will continue in 25 too, with the rich not holding back, even as millions of others cut spending in the face of inflation, as we just discussed. Sales of Mercedes-Benz cars hit a record high last year, while Lamborghini sold 10% more cars in 2024, according to Reuters. A 3-gigawatt data center by Reliance. Mukesh Ambani's Reliance Group is building what could be the world's largest data center by capacity in India, in Jamnagar, with a total capacity of 3 gigawatts, according to people familiar with the project who spoke to Bloomberg. It's not clear how Ambani will fund this project, which could cost anywhere between $20 to $30 billion based on expenses in the region for such facilities, Bloomberg reported. Reliance Industries, the main listed entity, has an equivalent of about $26 billion on its balance sheet. So the Jamnagar facility would substantially boost India's data center capacity, now estimated at less than 1 gigawatt, that's all of it, and tripling the size, that's to 3 gigawatt, would obviously give India an edge here. The largest data centers operating in the world now are less than 1 gigawatt, according to data from market intelligence from DC Byte, quoted by Bloomberg again. Data center capacity is often measured in megawatts, which is megawatts of electricity that the site can feed into servers, cooling systems, and other equipment. AI models or artificial intelligence models are obviously notoriously compute intensive and hungry for electricity or energy. That was the core report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.